startups tend to lose a lot of money, right? Obviously building something. But why would investors and how did this get started? Also, maybe why would investors invest in something that is planning to lose money? How did this whole concept come into picture?
So I think the element of spending a lot of money is more apparent and more obvious in B2C startups than in B2B. The reason being, when it comes to B2C, grabbing eyeballs, grabbing attention, getting lots of downloads for your apps, making your brand present in minds and hearts of a lot of people for a sustained amount of long time requires money, requires marketing dollars, requires you to spend a lot. And I think the nature of the consumer, at least the Indian consumer, I can say for sure, they are ruthless, they are merciless when it comes to brand alignment. They don't want to align with a brand very fast, and even if they've aligned with a brand for a sustained amount of time, if a new player comes in and offers something at a half the cost or a significant discount to what the initial product was offering, there is a chance that the consumer might switch preferences, right? So it makes it very difficult for the founder to be able to understand the DNA of the consumer in a short period of time. And that's why there is a sustained need for funding, there is a sustained need for marketing, which obviously requires a lot of constant funding, right? So that's the whole idea. The reason investors still invest in these startups, despite knowing the fact that their money can actually go down, this because at the speed at which they are spending money, they're not earning at that same speed, is assuming that you have a hockey stick curve. At some point of time, the losses would stop and the profits would rise. And when the profits would rise, or when the sales goes on an uptick in a significant speed, they are assuming that they would make multiple returns from their investment. So that's the core idea, that you would have a long period where they are spending, and suddenly it shoots up, right? Suddenly the sales start picking up, and then once it picks up, they are able to leapfrog ahead of the competition, and they are able to garner a significant large market share, and their month on month growth and year on year growth is in multiples, not just in percentage terms, and ensure that they get that dominance in that space, which allows them to dominate for a significant long period of time. So that's the idea. There are very few startups which actually are great candidates for such kind of spend, but unfortunately, maybe it's the immaturity of the investor ecosystem that far many more startups gain such funding, and far many more investors get lured into making investments. And I think that's where the problem lies.